Ladies and gentlemen, welcome to another edition of Forex Lens, Sydney Tokyo live session with SPDas. Please stand by.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at FOREXLENS.com. Get the edge on trades. Your eye into the markets. FOREXLENS.com.
SPDas, the trading floor is yours.
Yeah, thank you, Igor, once again, and good morning, good evening from whichever area or region of the world you're participating from. This is we are we are back again, Sydney Tokyo Open, and it is 22nd here and 21 on the western region. So let's get started off with the Euro USD daily chart, and we'll follow it up with other instruments lined up as well. Touching base with bitcoins lately, all the coins, sorry. Okay, let me just zoom out a bit so that the structure is clear. If you have been following all these sessions since last 3 weeks now, the story has unfolded quite a bit, and it's just beginning. Actually, it is just beginning to cut loose on the north side. But before we come back to the right hand side area where we've left everything as it is, uh, the larger degree counts are again as follows. It's the larger degree trend is up for euro, and the confirmation is with these five waves. We had a lot of conviction on these five waves when it appeared actually, uh, and it took some while for most of the traders to really believe that the larger degree trend has turned up and it's not a three-wave move or it's not something else. All right, it took at least another after this fifth wave was print. It took at least these two waves for most to understand what's going on. Okay, but our primary count was always a high probable count was always an impulse first, and the secondary counts were other possibilities. So finally, we've got Okay, that is a corrective wave I need to pick up from here. And ABC, and we change the degree to minor. All right, so with minor degree 5 waves up, followed by 3 waves down, what we are proposing, or as a high probable count, is that we are going to see 5 waves up at least at a minor degree if the entire structure is an intermediate ABC, or if the entire structure is going to be an impulse at intermediate level, then we are going to see 5 and then again 3 and again 5 to complete the structure. All right, so it's going to be like this entire plan is a multi-year plan actually. Yeah, even if the first 5 wave comes through, then we are at least 12 months away from seeing prices rallying above that point, or reaching at 1.13. So, keeping that in mind, it really is going to help us immensely to tackle dailies and the weeklies and the intraday setups as well. All right, that's why I keep on bringing the daily structure. Okay, let's go back down to the hourly. And if you look at the price action, there's a bit of sideways activity going on after that three-wave decline. Now you never know if this this sub-minute wave two, which we have print here at the backside of the trend line, I was quite confident. You see that bounce coming up right after the New York live when we were just about that pattern was forming, and it went all the way through 35 mark. So I was just wondering if there is a triangle in the making. Normally wave twos are not triangles, but in case of the consolidation continuation, it might be a triangle as well, or maybe one more subdivision is taking place right now. So maybe the third wave is extending. I think you're getting what I'm saying now. Uh, the third is already extending. That's what we have proposed, correct? And it is also possible that the third is extending. So it's going to be an extension within an extension, which is going to take prices much higher in a much quicker way than we might have anticipated. So trading point of view, coming back to that, uh, prices have already reached for the four handle very comfortably. Now, yesterday's low was one of the best entry prices that we have discussed. Now, if you're just joining, and if you'd like to get on to the long side, getting onto the short side is going to carry too much of risk. What I'm going to do is draw this trend line here. Okay, one aspect is that if the bottom is already in place and wave two that we have plotted also is in place, then this trend line, sorry, is going to act as the outer trend line or the intermediate trend line, and it's going to stay there. All right, unless we are dealing with a leading diagonal which is forming right now. There could be one more high up there and complete the leading diagonal structure with wave one going here and then coming back for a wave two. In that case, we'll get another opportunity to get on the long side again. But the price action has still not confirmed if it is a leading diagonal in progress. All right, so we are expecting it third wave extension. So trading point of view, if we get a chance to re-enter, I mean, if this is a consolidation going on, somewhere around the 370s could be a nice entry point, or maybe a retest of 1.0340 could be a nice entry point. All right, but the stop loss right now is suggested to be at 1.01. We will revise the stop loss once we are very confident about the extension in place, and as discussed earlier in the last session, once it pushes significantly above that 450 mark, we would want to adjust the stop loss and move it from 1.01 to a higher level. There we would be almost at a break even then. All right, so it will be a break even, and also thereafter we will start locking profits with each subwave unfolding. Medium term targets should be should be seen around 1.06. That's the handle. 1.0630. That is the handle, and also a resistance wave 4 of one higher degree. A previous wave 4 of one higher degree, lesser degree, sorry, and followed up with 1.09. It's a midterm resistance after that. All right, so these two are the major targets which we will be following through. And that is the path which we have laid, keeping it as it is for now. Let us see how the third wave extension is unwinding. It would be very interesting to see the story unfold. All right, so that's the story for euro. On the long side, please, dollar index. You know what? Most fundamental stories for dollar. I mean, most analysts on the dollar were were, were talking about dollar printing a multi-year high, right here, 110 handle. And if you remember, that is where we started talking about a potential top which could be in place, and now we are seeing it all happen. Okay, so we missed that particular high which back tested the trend line as well. So this is a beautiful story. Wave one, wave two, one of three testing the outer trend line. Possibly we've got a two of three here midway, and then the three of three might be just wanting to unfold lower. That's not a back test. That's actually the wave two plotting. So the back test has just missed, like unlike the Euro USD, we just tested the backside exactly. So when that's what I'm trying to say, the objectivity that this model brings into the trading desk, onto the trading desk for helping traders identify major turns is is immensely helpful. And for better trading, actually, we what we need is objectivity, whether it is a human form of trading or the emerging form of trading, which is becoming very popular as the AI. All right, because if the moment you start becoming or you are non-attached or unemotional and you're trading with a plan, everything starts to fall into place. The most important thing which will fall into place is the risk management, where you'll be very clear where the stop loss is going, because objectivity is very clear that if this level is breaks, I'm out of the trade, like what we decided in gold, right? So the Elliott wave model is one of the best tools that brings a lot of objectivity on the desk, and with few patterns of identification. And of course, it takes a lot of practice, but the predictability ratio is uh, is quite high, more than 85% to 90% at times. So if we have done correct what we have done here or what we have proposed here, then dollar index should be accelerating on the south side. Remain on the short side, please. Ideal price around 108.76, which has just met yesterday. That was a sorry, past support resistance as well. So believe it or not, if this is the third of third wave underway, it's going to go very fast and very sharp. and very deep as well. All right. Stop loss for now at 110.30. All right. Let's go to gold because that's where the action would be. We are watching it very closely now. It's not letting the 45 handle loose, correct? I'm going to bring up the 4-hour chart. Remember that is primary wave 3 termination around the 2780s. And now we are looking for a primary wave 4 uh, ABC pattern. At this point in time, the high probability setup is that wave B would take a form of ABC will be taking a form of standard flat and not an expanded flat because we've seen this RSI diverging scenarios since quite a long now, but we've got to respect the price action because we've got to respect it. All right, market is the boss. So if markets choose to unfold as an expanded flat, which is a remote possibility still, of course, percentage is reduced, but it's still a remote alternative count. We've got to be prepared for that. And managing our stop loss is one of the most important part. 27.55. That's it. We are not recalculating or recalibrating that any moment right now. Let's see how the turn is coming up. If it doesn't, it's okay. We lose a trade, but we've got to stick to what we have planned earlier. Now, looking at the hourly chart, and let me zoom out a bit. All right, now if we look at the subwaves from the fourth wave, we go a bit deeper, then the sub-minute waves are looking, because wave 2 was a sideways, sharp wave, then wave 3 rally, wave 4 was quite sharp, in line with the theory, and that could be the fifth wave of the minute, not minute, but sub-minute level, which is complete now. All right. Now, what if that is correctly done? Then okay, I'm going to shift this on the right hand side, please. And we've got wave B here. So the fifth wave is complete, also hitting the 61.618 Fibonacci extension. A lot of sideways activity here. That needs to break. We need to see a break. The lower degree is around 12718 now. So we've got to keep an eye on 2718. All right, because the first shout, or for the first shout out, let's put it a human touch, the first initial shout out is going to be at 2718. So keep an eye on that. Once we see a break below 2718, we can resume playing uh, selling on rallies game again. At this point in time, it's better we don't do anything except holding on the short sides. And more stronger confirmation is going to come once it breaks below 2690. It's going to be very interesting in the next few hours how the yellow metal is going to unfold. All right. At the moment, larger degree, minor wave 4 on the downside towards 2500. That's what we are holding shorts for. Okay, dollar, the Dow Jones. Did it hit the backside of the trend line? Yes, it has hit the backside of the trend line. Now, did you see that in the New York session, we had done the small arrow up first, just of a small intensity, and then a turn lower. And you see price action actually going there. It's like fill in the blank. I mean, I've seen it time and again. Markets doing that. Where you put a fill up blank there, and market fills it up, and it is quite exciting to see what is happening right in front of us right now. At this point, we have kind of done or we are markets have kind of completed what was expected out of it. Now we are mid-week, Wednesday. Okay, normally the trends would set up for a week and then it would begin the new trends over the next week. Now that's not a rule; it normally does happen. But the next 2 days for of the trading week left, I mean Thursday and Friday, maybe it's going to consolidate here. Ideally, consolidate means there would be a tight range just at the backside of the trend line, and it would want to create an evening star on the daily chart, right? Somewhere, let me bring up because that's what we are discussing right now. Daily chart and candlestick patterns. So you've got a huge bullish bar here, a couple of days of indecision activity, and a Friday followed up with a bearish bar gives us an evening star trading signal. So we will watch out until Thursday or Friday what kind of pattern is unfolding. That's what is expected to unfold. All right, and it looks a neat little head and shoulder as well, where we've discussed time and again that we are looking for a right shoulder touch. You know what? I'm going to draw a trend line here now. This is going to be very interesting going forward. Let's do a trend line. And once again, I repeat, sir, trend lines are the most sensitive aspects. It gives a human touch when it comes to trading. So, if right shoulder is in place now, markets would want to be on the sell zone of that particular trend line. And believe it or not, we are doing this trend line on the 21st, 22nd overlap of January 2025. If we have done this correct, then it's going to remain with us for the rest of 2025. All right, and it gives me a lot of confidence to state this that if it's done correctly, the market has gone and print a new high. There's going to be an outer trend line for the next 12 months at least, and we'll keep following. Markets will keep following this trend line. We are going to come see very soon the results maybe. Okay, so the shorts are active. The range is hit 44,000. Stop loss around 45, mid 45,000, or you want to extend it to 46. That's up to you. But the downside is around 37,000 to complete the first cycle. This I see the most promising story of 2025 should be unfolding in ideally in the Dow and SPX and Nasdaq. Uh, uh, I'm going to bring up Russell 2000. Okay, let's do that in the New York Open. The the Russell 2000 is also uh, depicting a wonderful story, and it would be nice to have a look there as well. Sorry for that cough. Uh, Bitcoin, let's have a quick view. It's consolidating. The coin is consolidating. It had dropped yesterday, giving us an opportunity that was at a tight risk opportunity. But as I said, it's a 33333 structure. It could be a drop one more time. Okay, that looks like a leading diagonal as well. So if we see this rally, I'm talking about this particular rally, could be a leading diagonal as well. Not really very sure, but at this point in time looks like a 333 structure being carved out right now, which could be which could be a property of wave 4 as well. So that could be A, B, C, D, and E. Now that gives us more confidence right now. If that is wave E which is being carved out, price action around 102 would be seen in the near term, intraday. That could be a pickup point now. And the reason, okay, until the last session we were asking to hold down, but if it's a triangle, it gives us a confidence to pick up on the long side from 102 and the stop right below 99. All right, because if that's wave 4 in the making, it will not break that 99 wave A low. Ideally, it should not break if it's a triangle in the making. So let's do a different angle here. If there's wave E here, and that could be the projected target. That is 113. Yes, sir. So the trade setup for Bitcoin now we are a bit confident about is pick it up on the long side, please, possibly on one around the 102 handle, stop around 99, okay, and target 113, and then of course you can go there about 115 and 120 the handles as well. Okay, this setup now, if it's a triangle and unfolding, it gives us the confidence to go on the long side again. Ethereum on the same lines. Ethereum should be, we are still holding longs with a stop loss of 2900, and the story remains similar. That's the same story which is being seen unfolding here. So we need to see a breakout now about this handle. That is again a consolidation zone, or you call an accumulation zone. All right, maybe one more drop lower and then boost higher. So targeting 4300 from here, we are on the same lines still. Stop loss stays around the 29 handle. But remember, I think what we are doing right now is probably the last wave or last leg, which we have been discussing time and again. Solana would also be doing the same thing, sideways consolidation. Yes, everywhere. So now it's more or less clear. Okay, let's do a projected trade in Solana. Let's find out if the triangle strategy is working out here as well. Now, if this is A, B, C, D, and so we are going, ideally we should see wave E come lower towards 235 or near about, and then push higher, and that thrust wave should ideally take us above that 290 high. All right. So the trade setup would be like long around 235. Stop right below that low, 229, just around the 230 handle. That's 5 points of risk. And target, let's do the target with this particular cycle itself. Let's try and project it. Okay, 314. So here's a trade with good risk reward ratio. Enter buying around 235. Stop just below 230. Alright, and target 314. So it's an excellent risk reward ratio. Alright, almost 80 points on the upside and 5 points on the downside. And we can get that confirmation on the RSI as well. RSI bouncing right from the 40 level. This is wave 4 in the making, sir. We are all seeing wave 4 in the making. So we can keep that projection. I think I should have kept in Bitcoin and Ethereum as well, but it's okay. Now we've got Ripple. Again, the same old story. That's a consolidation wave four in the making. Now could be a wave four of four, or could be that is wave one. Sorry, this is wave one, wave two, and then wave three, wave four, unfolding as a triangle, and we have one more leg on the upside. So if you're holding longs, please continue to do so with the stop just below that low, 2.08. The strategy remains the same. If you want to re-enter, you might want to consider around the 3 handle, stop just below 2.8, targeting through 3.7. Now it's getting more clear with all the coins. Uh, Probably the fourth wave, so we've got one more wave higher before bears might be wanting to come back again. All right, with that note, we are coming to let's bring this session to a pause. Once again, as always, thank you for tuning in, and we'll be back again around London times now, and I'll be more than happy to handle it back to Igor. Back to you.
Thank you very much,
Thank you.
SPDas. Always a pleasure.
Yeah, thank you so much.
You know,
Goodbye.
you say the market's the boss, but I'm gonna challenge you on that and say that you're the boss, brother.
No, no, sir. We've got to say we've got to stay very we've got to simply humbly follow what the market is telling us. That's what our job is.
Amazing.
All right. Thank you.
Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
Hey, thanks again for tuning in. We'll be back for London at 5 a.m. EST, followed by back with SPDas for the London session, and then followed by the New York with IT Trader covering smart money institutional trading. Uh, yeah, lots of developments. Then of course, yeah, the New York part two with SPDas just to keep that narrative going. We are just over 40 hours of live streams since January 1, feeding our AI agent for the unified market narrative, only available for holders once that's opened up. And also, our time series analysis is getting affected by that data. So, very unique and very interesting. Avatar systems are being tested and working out. Lots of interesting developments happening and have happened over the past week in terms of potential partnerships, etc. Of course, I don't like to talk about that kind of stuff until it's finalized, but definitely excited and looking forward to sharing that with you in the near future. Other than that, stay blessed and see you tomorrow. Take care.